On behalf of HC Andersen Capital, I would like to welcome you to our introduction to the share event together with Xplora Technologies. My name is Philip Coombs, and today I've got the pleasure of welcoming Steen Kierkebeek, CEO, and Michael Clement, CFO, to the HC Andersen Capital platform. The topic today will be an introduction to Xplora, which is a Norwegian-based company and a leader in the market for children's smartwatches. The event will begin with a presentation from Sten and Michael, and then move on to a Q&A. So please feel free to ask questions in the chat throughout. That's everything from me. So I'd like to pass over to Steen and Michael now to continue from here.
All right. Thank you so much for the introduction. My name is Sten Kierkebeek, as mentioned, founder and background from the telco industry and the tech industry over the last 20 years. We will split this presentation into two parts. First, I will take you through some of the company presentation, and then Michael, our CFO, will then guide you through some of the financial key aspects from the company. So let's start. So Xplora, who are we? We were funded with a very clear mission to onboard children in a more safe way into the digital world, and with a far better balance between screen time and physical activity. And furthermore, our vision is that we really believe if we can get children to move more, it can have a very positive impact to potentially change the world. And what's interesting is that we are onboarding the future generation into the digital world, capturing the next digital consumer with their first smart watches, their first mobile subscription, their first digital ecosystem, and many, many more services. And as of January 2022, Xplora had shipped more than 700,000 watches into the global market, with more than 120,000 monthly service subscriptions. Currently, our team consists of roughly 100 employees, with headquarters in Oslo in Norway, but with offices all around the Nordic markets, including also London, New York, Hamburg, and Madrid. I would now like to take you through our core value proposition, starting with our physical product, the hardware, the smart watches. And we have two key revenue streams. The first one comes from the Xplora watches, as you can see on the screen. And the core positioning with our product is that we define it as the child's first mobile phone. And with the watch, we have services such as call only to predefined number from our mobile application. You can send messages. You can see your child's location. You have the ability to set up safe zones so you can be alerted when the kids, for example, arrive to school or back home. You have a SOS emergency feature, so with one click, your child can activate and notify everyone on a defined contact list. And of course, we use our step counter in the watch to activate a whole lot of services that I will come back to. On average, we sell to distributors with a price point to distributor roughly 80 to 100 euro, with the objective to have a 30% margin. On the next page, you will see our second and potentially even more compelling revenue stream that is coming from monthly recurring services. And since this is a mobile phone, it requires a SIM card and a connectivity plan to work. So in the Nordic market, we have established our own MVNO setup, driving high margin recurring revenue from the mobile subscription. And while the phone is an enabler to drive connectivity from SIM, we also see that the SIM cards is a great way to activate service or premium service additional revenue, which allows us to increase ARPU and also a higher lifetime value. And throughout this year, we will therefore launch various service packs all with connectivity included as standard, but then with various levels of value-added services and content on top of it. A typical software approach, all with margin way north of 50%. And furthermore, a key part of our strategy throughout 2022 and forward is to offer our platform services to third parties, so we can grow our service revenue independently of our watch sales. Remember, our category is a rapidly growing industry, and with our unique GDPR-compliant IoT platform, with our SIM connectivity, that allows us the opportunity to provide kickbacks and the highly compelling service and platform services, we can be relevant far outside our own watch sales. I would now like to take you through some key samples of what is some of our premium and value-added services that I just referred to in our service pack. The basis of our activity platform is our partnerships with some of the world's largest entertainment brands. We have worked with partners such as Paramount, Netflix, Sony, Warner Brothers, Fox Disney, to mention a few. And this is important to engage the children, which eventually will determine the lifetime value of our services, because the children need to love to wear the product every day. Plus, they are all activity-based, these integrations, so that also increases the activity levels to the kids, which again is very compelling toward the parents, because their kids is basically moving more. So all this is part of our key services within our GoPlay platform. On the next page, I also wanted to give you an example from the world of sport, as we have just started to explore this huge opportunity with great initial response. Sports such as football or basketball or baseball all have very high loyal fans. And it seems for us to be a great way to grow our brand and presence and engagement on our value-added service platform. One example, as you can see from the recent Benfica case, where services, competition, background screen on the watches all were part of the value-added service proposition. On the next page, I also wanted to highlight a very key important part of the company strategy, which is to have a very strong sustainability approach and sustainability strategy. That is very important for us to be selected as a key partner from retailer and telco and other partners. But we also see it really engages our children in our user base when they see and experience that their everyday activity actually can help to impact for a better world to children across the world. And currently we have partnered up with United Nations and UNICEF in some or more of these great products. And before we go into the financial aspect, I would just like to show you our current footprint. In our category globally, we have the broadest footprint and distribution footprint of all competitors. Currently, we are available in more than 20 global markets, and we are distributed by more than 80 retailers, and therefore in a very good position to continue to grow, which Michael will now take you through some of the detail and historically how we have grown the company so far. Michael.
Thank you, Sten. Let's move on to a short introduction to our financial history. Xplora is a growth company. We are, as Sten mentioned, a leader in our space in a rapidly growing and very early stage industry. We are currently addressing the first mobile phone for children, targeting children in the age group of 4 to 10 years of age. In other words, before they move into the world of smartphones. Growth has been very, very strong, 24-fold our revenues up over the last 4 years, from 18 million, our first commercial year in 2018, to 431 million NOK in 2021. These revenues have been driven both from sales of devices, our smartwatches, but also services. In 2021, services accounted for 21% of our revenue base. Geographically, Germany is our largest market. In the last quarter of last year, Germany accounted for 43% of our revenues, followed by Norway and Sweden with 34% and 8% of our revenue base. We entered the US market in only online channels in 2021, and the US represented roughly 3% of our total sales last year. We recently established an operation in New York City and aim to increase both the revenue base and the share of revenues from the US market from 2022 onwards. As mentioned, services make up a very important focus area, but also a share of revenues. As Sten mentioned, we have MVNO operations in the 4 Nordic markets, and we seek to extend that to more markets outside the Nordic region from 2022. We reported recurring value-added services of 91 million NOK in 2021. That largely came from an acquisition we made in the second quarter last year. This company and this operation has grown very, very rapidly, as we have also seen, with a very strong and profitable subscriber base, where we see a lifetime value over their customer acquisition cost in this space of around 7 times in 2021. This is the basis on which we will attempt to continue to build value, both from existing but also new services as we move ahead. Underlying, we've had a very strong focus on showing that we have a sustainable business model, and we have continuously focused on developing our underlying gross profitability from devices, but also through adding value-added services and connectivity services. We have therefore been able to grow our gross earnings and gross profitability sharply over the same time period. 2021 gross margins were at 45%, up from 30% in 2020. Therefore, with gross earnings growing from 60 million NOK to close to 200 million NOK. We will continuously work on improving our underlying profitability as we move ahead. And this has also, from being a startup company, investing heavily in products, in services, in markets, in our team, naturally leading to some initial losses in our first years of operation. We proved to post black figures and positive EBITDA earnings in 2021. Which naturally is a milestone for the company. We certainly are seeking to improve and continue to grow and continue to improve our operating leverage as we move ahead as well. Our underlying subscriber base, as Sten mentioned, 123,000 subscribers at the end of last year, most of which were in the Norwegian market, where we have the longest track record. We currently have roughly 17% of children in the age group of 4 to 10 years of age as our subscribers. Sweden, second longest history, around 4% penetration, 31,000 mobile subscribers. And the growth rate, we're growing in all markets continuously. We now will seek to extend our connectivity services to outside the Nordics. We have just introduced in the North American market late 2021, and will roll out continuously into new markets through 2022 into next year. And also, as mentioned, introduce and hopefully extend our MVNO services to new markets as well. So maybe Sten, you would like to sum it all up?
Thank you, Michael. So in short, Xplora is a market leader in our core markets where we are present in a very fast-growing industry, as mentioned. Also worth to highlight our strong focus on scalability, but also profitable growth, as Michael just presented from a financial perspective as well. The company really focused on a compelling recurring service revenue business model, looking into our product, our watches, as an enabler to really scale highly profitable services, and also to grow our service platform far outside our own smartwatches. We have a proven growth record and also expectation in 2022 to continue this growth with a minimum revenue growth of 50%. And also a very important point these days in particular to mention that Xplora as a company, we are funded very well to deliver on our growth ambitions going into this year with a balance of 140 million NOK. So I think that's a good summary, and happy to move into this section with Q&A and questions.
Great. Thank you both for walking us through that presentation. I thought it was a very nice introduction to the company. We have received a good amount of questions throughout, so we can work through them now, and we should have time to get through them all. So can start with a question regarding the chip shortage. So it's asked, how are you affected by the current chip shortage?
Yeah. It's a very relevant question all across the tech industry these days. Luckily, we have been in the industry for quite some time. We saw this potential issue in a very early days. For this reason, we also made sure to have a very good way of funding the company, allowing us to enter into better agreements and plan longer in advance. We also made a strategic decision to have multiple manufacturers and also base our product on multiple platform, Qualcomm being one of them. So in a combination of being able to manufacture and produce longer time in advance with higher volumes, plus having multiple manufacturer and multiple chipset, we have been able to avoid any issues so far with this shortage, and of course are monitoring it frequently going into 2022, because we do believe that this will continue to be a topic for many companies. But so far we have managed well for the reason I mentioned.
Very nice. So we also have a question which touches on the fact you've demonstrated positive EBITDA now within the smartwatch industry for children and shown value within the industry. Is there a risk that a larger player like Apple or Samsung enters this market?
That's also a good question we have received for many years now. I think, yes, of course, Apple will look into the whole family space. If you start with Apple, they did some announcements roughly a year ago on their family service proposition. However, the feedback from our key distributors, retailers, and telco is that Apple have a very high price proposition, which for that reason excludes a lot of families to purchase product for the kids. Of course, it will be some that are willing to pay that high price, both for the product and services that comes with Apple, but also that you are basically locked into the whole Apple ecosystem. The child needs an Apple product, you need a full Apple extended service proposition, and also, of course, the parent would need potentially the Apple phone to run the Apple family service. So it's a very high price proposition. With the other big players on the hardware side, such as Samsung and the equivalents, are typical a hardware player building great products, but what we see is the value in this proposition is the combination with the product, the services, the platform, and the connectivity all in one joint proposition. And historically, the big players from the hardware industry do not have the tradition to create and develop all the kinds of services. However, that opens an opportunity, as we mentioned, to potentially license and distribute some of our services, the GDPR compliant IoT platform and the connectivity or the premium services, to some of these parties if they go into the family or kid space. Outside the big partners, such as mentioned, Apple and Samsung, we do experience 2 or 3 key competitors, smaller startups or equivalents into each of the markets. However, none have managed to establish themselves in multiple markets, same way we have, and none of them have the same extent of platform premium services and connectivity as we have.
Very nice. So I think we can move on to the next question, which is regarding the ownership structure. Maybe you could comment a little on that.
Sure. Xplora was listed on Euronext Growth Oslo in October 2020. We currently have around 1,300 shareholders. Top 20 shareholders hold roughly 2/3 of the outstanding shares. The largest shareholder is our chairman, controlling close to 14% of outstanding shares.
Thank you. Moving on, we've got a question around your main competitors. So you touched on it a little in one of the previous questions, but maybe you could more explicitly outline who the main competitors in this market are.
Yeah, so as mentioned previously, we do see 2 to 3 competitors in each of the individual market. There are some in Australia, there are some in North America, there are some in Germany. And as mentioned, we do not see any key competitor being established in multiple markets, such as we have in 20 plus markets. And also I would say the key differences is that although they have potentially nice, great hardware, they do not have the same extent of additional premium or value-added services, which we see is extremely important, because sometimes parents would buy this product for the peace of mind perspective to their children. However, if there is not compelling services on the watch, we see that the children will use it quite of a short time period, and then you do not have this ability to drive long-term recurring service revenues on top of it. So that is a key part that differentiates us from the key competitors.
That leads quite nicely into the next question, which asks, would you say the potential in the Nordics is taken out as penetration is around 20 to 25%? And can we expect a decline in this region?
I would say short answer is hopefully no. We're in an early stage industry. We've seen in pretty much all other mobile segments that penetration rates have grown from low levels to close to or at 100%. We are still early stage in our industry, and we will certainly continue to build penetration rates in all markets, including the ones that have higher penetration rates. On top of that, we are, as we mentioned, working very hard to try to increase the lifetime value of our customer. One way of doing that could be to extend the number of services that we can include in our current offering to our current segment. Another way of addressing that is that we in 2022 will create or introduce a solution that will enable the migration of a subscriber from a smartwatch over to a smartphone, where they thereby take with them the service elements of what they have in Xplora. Naturally, that will prolong the customer relationship and also extending the customer lifetime value, hopefully significantly as we move ahead.
Very nice. The next question asks about the contracts you enter into with the telecoms partners Telia and EE, and it asks whether these partnerships or these contracts contribute additional revenues or if it's just unit sales.
Very good question as well. And before going into the actual question, I would just like to emphasize the channels and the market opportunity. And as a rule of thumb, we see that on the overall market size and opportunity, online sales being web shop and Amazon normally represent 20% of the market or the volume. Traditional retail outlets and sales represent 30%, and then the remaining part of 50%, the biggest chunk of the market, would normally come from the telco partner or telco sales, such as Telia or EE. So from a pure volume game, the telco partnership is extremely important to drive the market and our position in the market. That means it drives a lot of volume of smart watch sales. However, as Michael was just referring to, the strategy to extend the lifetime from our smartwatches to the smartphone, that is also the key strategy, the interest from the telco industry to look into this category. Because while the market for smartphones are highly saturated with 100% penetration, and the acquisition cost to take a new customer is extremely high, it's a very compelling strategy to use our platform and product to onboard the next generation of smartphone users, 2-3 years of revenue with a smartwatch, and then extend it into a smartphone. And if that's a strategy for the telco, it's also very important for the telco to drive as much content and services throughout these 2-3 years with smartphones as possible, because that would be the glue and stickiness to transition the same user into the smartphone, continue to use these services, as Michael was just referring to. That allows us a great opportunity also with the telco industry to drive these additional revenues, because they will sell the products, of course, with the EE or a Telia SIM card. However, it allows us with a great opportunity to upgrade, upsell that customer to premium services that we deliver. And the customer will then activate those services via the Xplora application. So short answer is, initially we'll sell primarily product, but with a great opportunity to upsell premium services also to the telco customers.
Very nice. So the next question is regarding market penetration, and is a note on the high market penetration in Norway, and asks whether you can expect similar market penetration in some of your other markets moving forward.
We certainly believe so. As mentioned, we have 17% penetration in Norway, where we have the longest track record. We have 4% in Sweden, 3% in Finland as of the end of last year, and Denmark slightly ahead, but we only have 1 year track record in Denmark. If we look at the growth rates in penetration and time shift them to kind of the same initial startup phase, they follow each other very, very closely. We have a slide on this in our Q4 results presentation that you may take a look at. So yes, and also we have a very similar go-to-market approach and marketing approach in all markets. So the short answer is yes.
That feeds into this next question, which asks about your market approach in new markets, and asks whether the approach in the US will be different to the one you've taken in Germany.
So actually, as Michael was saying, we have from day one in Norway tried to document and replicate our go-to-market strategy in each new market. It consists of various phases, starting with an online launch in all markets from either web shop or Amazon, basically to drive insight in the market, how the consumer reacts to our marketing material. We'll launch hundreds of various assets to learn how this market will convert into sales. That builds a huge library of insight in these new markets. We normally drive phase one with online for 4 to 6 months. In parallel of doing that, we are building the first initial retail partnerships. So once we have marketing aligned and spot on and optimized after 4 to 6 months, we move into retail partnership, making sure that when we launch with retail, our marketing actually work and convert very efficiently, allowing us to grow the retail presence. And then into phase 3, we scale with telco industry, as mentioned previously as well. Once we have all the 3 main channels, online, retail, and telco, we move into traditional ATL marketing or scale marketing, where we optimize that for each of the various markets. Some market, traditional TV advertising, such in Germany, has been a huge success, while that could be adjusted to other markets. But we always go through these steps, online, retail, telco, and then start to really scale with mass marketing.
Very
That
nice.
also allows us to drive a lot of documentation and insight from each market moving into new ones.
Very nice. So we've gone at our half-hour mark, but we've only got 2 questions left. So I think we press on and continue with those. So the next question is asking how you see your margin development looking forward, maybe towards 2025.
As Dan mentioned, on devices, we have a gross margin target of around 30%. On our services, we aim for a significantly higher margin, well north of 50%. Some service elements will have, a gross margin closer to 100%. Last year, we had an overall gross margin of 45%, and naturally, as we continue to move ahead on services and force that ahead, we aim to increase our overall gross margin over the next few years and continue to show scalability. We had 4% EBITDA margins last year, full year, 16% in Q4. And aim to increase or to continue to show an improving operating leverage and increasing margins go ahead. We have not issued a specific EBITDA target for the next few years.
Very nice. And then our final question asks if you can estimate volume growth for 2022.
We have issued a guidance for the current year of revenue growth of more than 50%, minimum 50%. That guidance is based on a bottom-up approach from all our sales people and sales customers, sales channels. And naturally our expectations for new markets and new services being introduced through the year.
That's great. Thank you both for taking the time to give the presentation here with HC Andersen Capital. We're out of time and out of questions, so I think this would be a great time to end.